Hi guys, today is Thursday. It's inspection day. I'm just popping in right now in the middle of my work day. It is noon and I have a break in my schedule because I don't have a meeting until 1 p.m. and that meeting will go from like 1 to 5 actually, but the inspection will start around 2:30 and I'm popping in because, okay, the loan is accepted. They got the earnest money I wired over. They got the option payment. I set up the inspection. What happens next? So I'm now working again with my lender, who my realtor sent my lender information regarding the contract and everything. And they have pre-filled in my loan application. It is about 70 pages. And as you guys know, I am a working woman, so I am still working from home. Yes, my head looks old. I'm gonna comb my hair later. Okay, don't judge me by my head. But I'm working from home, so I am like doing all of this right now at this time. So I hope to get all of that squared away today as well. So then I will go through the mortgage application process, and that's called underwriting, when they send your file to be thoroughly examined by the mortgage financial team, and then they will come back and let me know if I'm approved. I have no doubts I will be approved for this because this mortgage is actually less than my prior mortgage. I think I told you that yesterday, and so I feel really good about this. Sometimes if your credit isn't good, if your financing is shaky, if you have a shaky job history, these are all the things you need to think about before you apply for a mortgage. So I knew when I sold my house 5 years ago that I was going to buy another house. So I've been in mortgage ready mode for 5 years, you guys. Like I might not have had the down payment that I put aside right now, but everything else, my credit score has been in tip-top shape. I have not let my credit fall below 800 over these 5 years because credit gets you a mortgage, honey. Even when you ain't got no money, you can get a mortgage with some credit, I'm telling you. So don't try to skimp on the preparation, because I left a comment today for one of my subbies. Hi. For everyone who's wishing me well. It's funny because you guys are like a month behind in what's happening. So you're seeing me put the offer on the first house, but in real time, I'm on to another house. But I just want to thank you all for all the love that you're sending me even then. But I just want to say that I sent a comment to her that cash and credit is king in terms of preparing for your mortgage, and that is no different. So that's what I'm going through right now. Oh, my hair looks bad, y'all. But yeah, that is what I am going through today, just trying to get that mortgage loan process squared away. And one thing that I wanted to pop on and really stress to you that you should examine with a fine-tooth comb is that a part of the loan process, they're going to give you an estimate. It's going to be a financial estimate of not only what the principal, which is how you pay down the loan on your mortgage, but also the interest, because you are going to pay the bank for lending you that money. So it's principal plus interest. So that P&I plus any PMI, which is private mortgage insurance. If you put down less than 20% of a down payment, you will have to pay private mortgage insurance. The amount varies, one, by how much or the percentage that you are actually putting down, as well as your credit strength. So if you are weaker in credit, they're going to probably jack that up. If you put down less, they're probably going to jack that up. I'm putting down about 15% on this mortgage, and so my PMI is probably only like $50 a month for the first 5 years, and I'm okay with that because I get to keep more cash in my account during this unsettling, uneasy financial time that America is going through. So I'm okay with a $50 PMI at the moment. They will also put on there is an estimate for your insurance, and it could be off. Insurance in Texas is very high. We deal with a lot of like tornadoes and hail and rain and flood, and so they generally will plop down like $100 per month. That's just a general estimate that they may put down. Hold on, I'm getting a note from work. Okay, so because of that, these are estimates. It's not going to be exactly. And then they're going to give you an estimate of your closing costs, of every single fee that you're going to have to pay for during this mortgage process. And one of the, one of the things you should pay attention to is how much is your closing cost. That's additional money you have to bring to the table in addition to your down payment. So yes, I'm putting down 15% of the sales price of the house plus paying for closing costs. I did ask the seller to give me a credit for my closing costs, which is 2% of the sales price. So she will give back 2%. And they reduce the closing costs by that amount. And then the seller is also paying for the title insurance policy. Now, the title policy is like if you buy a piece of land and then years down the line, someone says, oh no, your private property boundary is encroaching my private property, or whatever this person sold you the house and said you own all this land. You really don't own all that land. That's not your fence. That's not your tree. That's not your backyard. You can file a claim against your title policy for whatever financial detriment that will cause you, up to the total amount of the policy. So that is actually a very important piece. So the seller paid for my title policy, and it was about $1,800. So that's also a credit to my closing costs. So all of these estimates, all this financial stuff is coming through. This is why I'm telling you women, especially to my women who want to buy a house, or a house by yourself, or if you're buying a house with a man who is not financially savvy. Y'all, this is not a heart decision. It's a business decision. There are financial, insurance, risk, credit, terminology, and elements that you have to be very familiar with and very comfortable with during this process. If you don't understand something, get with someone who does understand it. It might be your realtor. It might be your lender. It might be your big sister, because I was that person for my brother and my sister-in-law. There are a lot of things that, because I have owned a home, refinanced that home, sold the home, now I'm going through this process where I've gone through and had the offer fail, and now I'm putting on another offer. I just know what to expect, and I am more comfortable going through this. I also have an economics degree and an MBA in finance, and I've worked in risk and credit and all of that. So I am very comfortable with the terminology, but even I have credits. I have questions. Even I have questions, and I am not afraid to ask. So that's what I wanted to pop on and say today. I don't know if this is going to be its own video or if I'm going to combine it with another. It is about 10 minutes right now, but I just wanted to say this. So this is the post-offer video on offer number 2, property number 2. What does this look like today? And a lot of this is time sensitive. You have to get back to your mortgage company within a certain amount of time. You have to give them the documents within a certain amount of time. A stipulation of the home contract, the sales contract, is that you have to secure financing by a certain amount of time. So time is of the essence. In this case, this is not the time to be slow footing it. And one thing to do, if you know you are really, really ready to buy a home, get all your documents together in advance. It might be your tax returns. It might be 3 months of all your savings account statements, 3 months of all your financial statements, 3 months of all your checking account statements, 3 months of all of your pay stubs. Get that together, put it in a folder. You're going to look like a genius. Because when they say you don't have to get ready if you stay ready, sis. Stay ready.